There are four major categories that one needs to watch out for when it comes to big ticket key decisions that are likely to be taken by SEBI at its board meet. Let's start off with the first category, which is the category of FPIs, the most sensitive category. We are all aware of the recent furor by foreign funds, especially those managed by NRIs, regarding that FPI circular, which had imposed certain curbs. We are given to understand that the SEBI board is likely to give its final shape to the FPI investment norms, especially in those cases where funds are managed by NRIs. And we are given to understand from sources that SEBI is likely to relax the regime based on recommendations that were made recently by a panel led by HR Khan. That's as far as FPIs are concerned. Now let's look at the entire settlement mechanism. We are given to understand from sources that based on a report that has been submitted by Justice Dave, SEBI is likely to widen the scope of its existing consent or settlement mechanism. This is a route which market participants and corporates use to settle cases. Now, we are given to understand that serious violations like insider trading, like front running, and even disclosures on the IPO prospectus, all these aspects may be considered for settlement or consent on a case-to-case basis. That's what we're given to understand. And of course, willful defaulters are likely to be kept out of the purview of the consent or settlement mechanism. Let's move on to the third category. The third category is the recommendations by the fair market panel, and that's where things are going to get really interesting, because the fair market panel has recommended that SEBI should have the direct powers to intercept phone calls when it comes to probes. Now, that's something that will take the final call or will require the final permission from the government, and they will have to be relevant amendments to the central laws. That's not all. This committee has also suggested that the trading limit for retail investors should be linked to their net worth. That's also an interesting aspect. And finally, we're given to understand that SEBI is also looking to widen its powers and tighten the entire regime for fiduciaries. Now, fiduciaries are those entities like chartered accountants, like valuers, cost accountants who are not registered with SEBI, but SEBI wants to have greater powers over them and in fact take action against them after the law has been laid down. So these are the four major buckets that one needs to watch out for when it comes to the SEBI board meet.